Today we'll speak about Bitcoin in the context of macroeconomics. Macroeconomics, of course, is the most important aspect of Bitcoin and the reason why Bitcoin came about. So we'll talk a little bit about macroeconomic analysis. Why is there a need for cryptocurrencies? What is Bitcoin? What is the solution that Bitcoin offers? And blockchain as a technology behind cryptocurrencies. So when we think about macroeconomic analysis, there are a number of indicators that are quite important to think of when we assess the economy. And we start with the USA because the USA is the largest and most important economy in the world and one that other economies follow. So consider, for example, the money supply, the inflation rate, the debt to GDP ratio, and the interest rate as four major indicators that we need to assess when we think about the macroeconomics of a country. I've given you here a website called Trading Economics. Trading Economics is a website that provides a host of information and on a large number of variables relating to the economies of every country in the world. So from the top, you could start by choosing a country, and it looks like this. You go down to the Americas and you scroll down to the United States. And when you're in the United States, you will see that there are a number of indicators on the left side, and on the top, a number of dimensions of the economy for which various indicators exist. So I want you to go into money on top, and under money, you will see the money supply. And under money supply, you will see that there are different kinds. There's M0, M1, M2. M2 is the broadest definition of money, which includes all the liquid money-like assets. And as you could see, if you spread it out for the maximum period of time, you could see that the money supply of the United States has been pretty stable. The growth of the money has been pretty stable up until around 2008. What happened in 2008? We had a financial crisis, if you recall, started in the United States. And as a result of the financial crisis, the government needed a lot of money to bail out the banks, bail out various companies, increase the fiscal spending. And as you could see, the graph from 2008 till about the period where COVID started has increased, right? The slope of the graph has increased, which means that the money supply has increased more significantly, with more impact. And from the period around COVID, you could see that again, the money supply increased, the growth rate of the money supply increased. Now, what does that all mean? It means that the purchasing power of the US dollar, as a result of the increase in the money supply, has decreased. In other words, inflation has increased. And with inflation, the purchasing power of the dollar meant that people are relatively poorer because they can buy less goods and services with a given dollar. So this is where Bitcoin entered. Bitcoin entered around the time of the 2008 crisis. And the maker of Bitcoin, the creator of Bitcoin, Satoshi Nakamoto, it's a pseudonym. We don't know who Satoshi Nakamoto really is, but somebody under the name of Satoshi Nakamoto decided that there is a new way, that a new method for which we should capture and transfer value, and he or she, or they, created this concept of Bitcoin. So Satoshi Nakamoto was part of a group of computer programmers who were also libertarian and tried to develop money for the internet. There were various attempts to make money for the internet, and Satoshi made a breakthrough in what we call the peer-to-peer e-cash, right? Peer-to-peer, from one person to another without any government involvement. Through the computers, people could transfer value, or transfer value meaning transfer money. So he writes, right around 2008, October 31st, I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party. The trusted third parties of regular money, of course, are banks and governments. And he wrote this very nice white paper. This white paper describes the tokenomics, the reason behind, and the solution that Bitcoin offers to the world. You've all been assigned to read this document, and there will be some specific questions that I have asked you to consider. So what are really the advantages of using Bitcoin, of this particular currency? Well, we could think about a number of advantages. For example, privacy. When you use Bitcoin, you're associated with an account, which is associated with an account number. There is no real person that can be identified behind the transactions. By the way, it's also one of the criticisms of Bitcoin. Decentralization means that there's no centralized body like a bank or a government that allows you to or decides that whether the money can transfer. Peer-to-peer meaning each individual has access and has the opportunity to verify that these transactions happened. Transparency means that everybody who has access to the network can see all the transactions. Immutability means that the transactions cannot be changed retroactively. Once a transaction is made, it's forever in the system. And a trustless technology means that you don't need to trust whoever you're transacting with. In fact, you don't even need to know whoever you're transacting with. And you do know that when you transfer the value, transfer the money actually is transferred safely and securely. And finally, the tokenomics is what I want you to really think about when you think about every crypto project. The tokenomics are the supply dynamics. Okay, how are transactions verified, secured, motivated, and how did the supply of this particular currency is developed. So in the case of Bitcoin, as you could see, one of the things that the owner of Bitcoin or the creator of Bitcoin has done, he actually put the newspaper article on the first block inside in the blockchain. He put a newspaper article of the day that he did it, and in that you could see it says Chancellor on the brink of a second bailout for banks. So what Satoshi Nakamoto has tried to show us is that the British government, in particular, he looked at the British government, bailout of the banks is a sort of a Ponzi scheme by the banks, by the governments, to increase the money supply at the expense of consumers. And in this very same newspaper, you will also see that there is some information about the Israeli war in Gaza, which was the war in 2009. So he writes, I will pay 10,000 bitcoins for a couple of pizzas, like maybe 2 large ones. I have some left over for the next day. I like having leftover pizza to nibble on later. You can make the pizza yourself and bring it to my house, or order it for me from a delivery place. But what I'm really getting, food delivered in exchange for Bitcoin, where I don't have to order or prepare it myself, kind of like ordering a breakfast platter at a hotel or something. They just bring something to eat and you're happy. I'd like onions and peppers and sausage and mushrooms, tomatoes, pepperoni, etc. Just standard stuff, no weird fish topping or anything like that. I also like a regular cheese pizza, which may be cheaper to prepare or otherwise acquire. And if you're interested, please let me know and we could work out a deal. Thank you, Laszlo. Laszlo was one of the original users of Bitcoin, and this particular transaction was actually the first transaction attempted with Bitcoin. Well, how much did he offer? Nobody wanted to deliver pizza, so he increased the Bitcoin amount, and he decided to offer 10,000 Bitcoins. And after offering 10,000 Bitcoins, indeed, one of the programmers that were working on this project did ask for delivery of pizzas. And this is the actual picture of the pizza that was delivered for 10,000 Bitcoin. Now, I want you to think about it. At that time, 10,000 Bitcoin was something like $20 for pizza, which is, I guess, reasonable. But in 2018, it was 66 million. And in today's prices, 2023, it's something like $400 million. Probably the most expensive pizza ever bought. So let's recap. What is Bitcoin? Bitcoin is a technology. Bitcoin is a digital money. Bitcoin is a product. Bitcoin is a commodity. Or is Bitcoin an asset, a scarce asset? Well, in fact, when you think about it, Bitcoin is all of these things. Michael Saylor, who is a owner, or so say CEO of MicroStrategy, a publicly traded NASDAQ company of SaaS, AI programming company. He is one of the cheerleaders of Bitcoin, and he has converted all the money, all the cash that he has in his firm into Bitcoin, and in fact has gone further to issue debt or bonds in order to buy even more Bitcoin. He defined Bitcoin as a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing ever smarter, faster, and stronger behind a wall of encrypted energy. I think this is probably one of the most beautiful definitions of Bitcoin, but a bit hard to understand in terms of the actual working of the currency. When we look at the market as a whole, Bitcoin today is actually one out of several thousand new coins that have been created since. Is this market for cryptocurrencies competitive, oligopolistic, or monopolistic? Are Bitcoin price takers or price maker? So when we try to evaluate whether a market is competitive or monopolistic, we could look at CoinMarketCap. And CoinMarketCap is a website that allows you to track the prices of all the different cryptocurrencies. And when you calculate it, when you look at the top cryptocurrencies, you have to consider whether the top 5 firms in the market or the top 5 cryptocurrencies in the market are worth more than 60% of the market. And if that's the case, we could say that it's an oligopoly. So when we look at this market, you could see that Bitcoin is roughly 40% of the market. The second biggest currency is Ethereum, which we will talk about later in more detail. It is about 20% of the market. So together, there alone, just these 2 cryptocurrency projects are already 60% of the market. So this is not a pure competitive market. This is a differentiated market with each cryptocurrency offering a very unique value to investors.